At the heart of the Reit's performance was our portfolio of high-quality, multi-suite residential rental properties. By focusing on our communities, we are creating places where residents are truly proud to live. In 2015, Morguard North American Residential REIT continued to deliver strong financial results. The real estate properties of the REIT generated total revenue of $198.4 million in 2015. Total assets rose to $2.2 billion at year-end. Net operating income increased to $104.2 million. And funds from operations, a key measure of performance, totaled $51.1 million, up from $44.7 million. In addition, funds from operations per unit has grown to $1.10. This significant growth in funds from operations and the resulting growth in adjusted funds from operations has had a positive impact on our payout ratio, dropping from 98.4% in our first year of operation to 70.5% in 2015. Management of capital is another key element in the REIT's financial performance. 3 mortgages were completed in 2015, totaling $128.7 million in proceeds. This reduced the REIT's weighted average interest rate on mortgages and retained debt to 3.8% at the year-end, compared with 3.9% a year earlier. Overall leverage decreased to 55% from 56% at the end of 2014. At year-end, the REIT's weighted average term to maturity was 5.1 years. The strategic vision for the REIT remains unchanged: to achieve stable and growing returns from a quality portfolio of residential rental properties. These properties are located in what we regard as promising markets in North America. Geographic diversification also adds stability to the REIT's cash flows, reducing the REIT's vulnerability to economic fluctuations that might affect any particular region. Net operating income generated by the REIT's U.S. properties totaled $51.5 million in 2015, a 5.3% increase. At the same time, net operating income from the REIT's Canadian properties for the year rose to $38.3 million, a 5.6% increase. Rental rates show the quality and attractiveness of the REIT's portfolio, and also the strength and stability of demand in the North American residential rental sector. In the U.S., by focusing on optimization of rental rates and management of suite turnover, the REIT has achieved a significant 6% increase in the average monthly rent year over year, and an increase of 9.4% over the past 2 years. In the REIT's Canadian portfolio, the average monthly rent has increased by 2.1% year over year and by 3.2% over the past 2 years. Management recognizes the importance of building the portfolio through acquisition, and so throughout 2015 we continued to look for acquisition opportunities. In 2015, the REIT acquired a 51% interest in an upscale 252-suite property located in Cooper City, Florida. 2940 Solano at Montera, about 16 miles southwest of Fort Lauderdale, is a newly constructed 11-building garden-style apartment complex. To make the acquisition, for a total of $56 million, the REIT co-invested with a Canadian pension fund. Management believes that such partnerships with institutional co-investors are a strategic growth opportunity. The REIT continues to focus on making quality acquisitions. In the first quarter of 2016, the REIT purchased 160 Chapel Street, a residential property in downtown Ottawa, Ontario, with a total of 370 suites. With that purchase, the portfolio today consists of 46 properties comprising 13,472 suites. Efficient management of the REIT's properties is essential to its ongoing success. including increased rental rates over time, control of operating costs, and a positive tenant experience. The REIT's continuous capital improvement program contributes to resident retention by ensuring that the properties remain attractive. Over the past 2 years, projects in both Canada and the U.S. were undertaken at several properties, including balcony restorations, elevator modernizations, and common area and suite upgrades. In 2015, a total of $17.8 million was spent on capital improvements. Blue Isle Apartment Homes in Coconut Creek demonstrates how ongoing capital investments add long-term value. Enhancements have been made to the leasing center, pool, and common area amenities, and upgrades to the individual suites are ongoing. The property has achieved a year-over-year increase in rental revenue of 7.9% and realized an increase in year-over-year net operating income of 20.3%. At the same time, occupancy rates have climbed. The Wreaths Portfolio, its holdings of residential rental properties, has grown to an impressive scale and is geographically well diversified. At December 31st, 2015, the REIT's portfolio of real estate properties was valued at $2.1 billion and included a total of 13,102 suites. With the REIT's recent purchase in Ottawa, that total has grown to 13,472 suites. Overall, the portfolio includes 31 properties in the United States, with an occupancy rate of 93%, and 15 properties in Canada, with an occupancy rate of 98%. For the management of Morguard North American Residential REIT, a primary objective is to generate stable and growing cash distributions to unitholders on a tax-efficient basis. In 2015, the REIT paid distributions to unitholders of 5 cents per unit monthly, or 60 cents annually, unchanged from a year earlier, reflecting a current distribution yield of 5%. Distributions amounted to $27.9 million for 2015. 100% of the 2015 distributions were designated as a return of capital for income tax purposes. Since its inception in 2012, Morguard North American Residential REIT has delivered positive returns for unitholders, with a cumulative total return of 24.6%.